Welcome to Money Secrets with Bill and Mike.
I'm Bill Alexander.
And I'm Mike Tove. And I own AIN Services, which is a financial planning service agency. We do insurance, we do financial planning.
And I'm Bill Alexander with WG Alexander and Associates. We're an estate planning, elder law, and asset protection law firm.
And today, this week, Bill, we've got Donna Stoyanovich of Carey Insurance Group. And
yeah, we get to welcome her back.
Yeah, we get to welcome her back. Because you know what's funny? Every time I turn on the TV, it seems like they're bombarding you with some ad about auto insurance, right? Whether it's bundling or accident forgiveness or buy your insurance online or save 15% or $500 or some
Or they'll
such
pay
thing.
the full value of your car. Or,
yes, exactly.
Or the like. And everybody saves you at least $500.
Right. And so the question is, how do they do that? And we all know that that's a marketing ploy.
No question about it.
But I'd like to try to get to some of the truth behind all of the craziness, because I imagine that that there's an awful lot of misconception out there about it.
Well, it is important for folks to understand how do you really compare one insurance company from the other, or particularly when it relates to automobile insurance, but it also isn't true for all the other types of insurance that a family or a business might need.
Or are they really that different?
And I think that's a really important thing for folks to understand, and I know that that's what we're going to dig into this morning.
Right. So when we come back, we're going to have a talk with Donna, and we'll see what we can come up with.
I'm looking forward to it, Mike.
I am too. Welcome back. So, Bill, Donna, welcome coming back.
Thank you. Thank you.
And
nice to be
nice
here.
to see you again.
You too. Thank you.
So, honest to goodness, Donna, all of these TV commercials for all of this car insurance, and they don't even talk about home that much, do they? But
that's true.
But they're kind of all under the same umbrella in a way.
Well, we're all deluged with commercials from at least 10 different companies. Mm-hmm. How, as consumers, how do we compare car insurance?
Okay. So, I mean, you can compare your basic coverages, your liability, your medical payments, your comp and collision, and you can...
Now, what's comp?
Comprehensive is, sorry.
I like people to comp me.
Yeah.
Right, me too. Comprehensive is anything other than a collision. So collision is when you collide with an object.
Like a windshield?
Like a windshield, like vandalism, theft, fire, wind.
Flood.
A tree falls on your car, anything other than a collision.
Okay.
So, but, there are companies out there that have us think that every insurance company, except them, will only pay for 3/4 of your car if you get into an accident.
I know the commercials you're referring to, and it's not accurate.
Yeah.
Well,
Right.
What is accurate?
Yeah.
Okay, so insurance companies use third-party vendors to value vehicles at their current market value when at the time of if the vehicle is being a total loss. So current market value is maybe not what you could go buy a brand new car for, but you don't have a brand new car possibly when you have that accident.
Okay. Well, Donna, I've always been told, and I certainly believe, that if I go buy a new car, the moment I drive that new car off the lot, it's no longer a new car, and
correct.
it devalues by a couple $1,000s maybe, or more, depending on the car.
That's true.
Well, and of course, an awful lot of folks, when they get a loan,
Right.
they're borrowing the full amount. 0% interest. That's hard to beat.
That's right.
So what happens if or how do I take care of it if I have an accident on my way out of the parking lot? I'm negligent. I don't, I pull into somebody, and my car's totaled. and I just paid, let's just say, $25,000 for the vehicle, and now the third-party vendor says that it's worth $23,000, but I have a $25,000 loan. What do I do about that?
That is an issue, and it can be a problem because you can be what we call upside down. So you are.
Well, I know a lot of folks that are upside down.
In your loan to value. So you can end up having some cost out of pocket because you're.
Well, isn't there an insurance solution to that?
Not necessarily. There is a replacement. There are some replacement policies for the vehicle, but if your loan payoff is higher than the value of that vehicle, there is no solution.
Wow.
It's out of your pocket.
Wow. So those ads that are suggesting otherwise are really misleading.
Well, they're suggesting, if I think I know what you're referring to, that they'll replace that vehicle, but that doesn't mean that they will pay off your loan. So there's a difference. Your loan could be higher. The payoff, especially if it's a brand new loan, could be higher than the value of the vehicle.
But isn't there, you can't get it through your automobile insurance, but you can get that gap insurance,
Yes,
can you
there
not?
is something called gap insurance, which a lot of companies have backed out of these days.
So you have to know who to get your insurance from.
Right. Well, it's not sold by the insurance company, it's sold by the finance company.
Right.
Right. So when you're financing your vehicle, you can buy that gap policy.
Well, I would think that would be very important
Yes.
for anyone who's not putting a lot of money down on a vehicle.
Right.
Because if there is an accident, they're going to be in trouble financially if they don't have gap insurance. And I wouldn't think it's very expensive.
Yeah, it's not, but it's getting, let's say, more difficult to find because of that reason. I guess for the insurance business, the possibility of it happening is very high. So
Right.
therefore, they're backing away from selling even that kind of insurance.
When did that start? I mean, has it been going on for a long time?
The last year or two.
Okay. So it's really a relatively recent phenomenon
Right.
then that we're seeing.
Well, it's a phenomenon that folks are backing out of it. You know, the insurance companies like to insure safe bets.
Right. Well,
That's right.
because insurance is basically about
Making money.
well, I was going to say
They're in the business for
mitigating
that.
risk. So,
Yes.
so the less risky something is, the more they're interested in it. And
Right.
Well, to me, it is a real issue for folks to be upside down with
Yes.
vehicles, and it's important for folks to know that there is different kinds of insurance out there that they really need to look at if,
Right.
if they're in that situation.
That's
so
right.
if somebody comes to you and they said, you know, I have this, and they present this situation, what can I do about it? What are some of the recommendations?
We would definitely tell them to go back to the finance company and have them look at a gap policy
Right.
for covering that gap.
Is that something that can be negotiated at the time of the purchase, or
Yes.
should be?
Yes.
So it would be a good idea if they knew about that going in.
Yes.
Because it's always harder to negotiate something that's a done deal after
Well,
it's a done deal.
from my experience, I think it's really helpful to talk to your insurance agent,
Yes.
a professional, before you buy your car.
Yes.
Because that way you get this advice in advance and you're not surprised by it.
Right, right. And we do get a lot of inquiries about, well, I'm thinking about buying these cars, and we talk to people about that, but there are, you know, probably more people who just go out and buy a car and then say, I got this car.
Well, isn't it true that a lot of these folks that sell the cars have very little understanding of the insurance side of things?
Right.
Well, I think it's also important for folks to know about the fact that some cars are far more expensive to insure, because oftentimes you're
Yes.
looking at the cost of the underlying car, but you're not looking at the insurance cost. And for some
Right.
cars, it's going to be much, much higher than other cars. And then
Right.
your insurance agent can lead you to maybe an alternate vehicle that at a much lower cost.
That's correct.
Which is interesting, because I suspect that if you use one of these chop shop, for lack of a better term, insurance offerings where they just have an 800 number. You get none of that.
No, you don't get much advice there.
Well,
So where
we
are
need
these
to take a
people?
break.
Yeah. Okay. So let's take a break, and we'll be back in a few, and we'll cover some of these things. Welcome back. So Donna, we were talking about a number of different areas along this, but I had a big question. Sure. And that is that every single car company out there says, well, you can save all this money by switching to us. How does that work? They can't all do that, can they?
No. Well, it's marketing, of course, and what they do is they offer, a lot of companies offer new customer discounts. So that they're in, those discounts then come onto your policy, and as the policy renews, they start to drop off.
Right.
So you end up back where you were, or maybe even
or
higher.
Yeah.
Yes.
Exactly. They make up for that loss, don't they?
That's right.
Right.
So insurance companies operate on experience. So the higher their claims frequencies are, or the higher amount they're paying out versus they're bringing in, the rates are then adjusting according to that.
Well, I think it's important for folks to understand that in North Carolina, automobile policies, the underlying policies, are the same. In other words, it's the same language, the same terms, so that, and the homeowners is the same way, where consumers can actually compare apples to apples.
Right.
But they're not all the same policies, because there are a lot of toggles and switches in there, if you will, depending on what your agent recommends.
That's right.
So let's first go with the automobile. What are some of those different toggles to where your policy might be different from your neighbor's, even though it's the same underlying coverages?
So you can have additions to your coverages that another company might not have. Accident forgiveness, which I know Mike was curious about, which is a big coverage that if you're in an accident, with some companies, accident forgiveness is, if you're in an accident, it's your fault, North Carolina allows the insurance company to charge points, assess points, and those points have premium increases.
In other words, they're going to ping you the next time you have to pay your premium.
Absolutely.
Right.
So if you have the accident forgiveness charge, which is an additional charge to your policy, then you avoid those points being surcharged to your policy, which is
at
tremendous.
least the first time around.
And they'll allow you to have one every 3 years.
Okay.
So one accident every 3 years.
But that's an extra expense,
That
is
is
it not?
correct.
In other
Is
words,
it
you're
a lot?
paying for
How
that
much more
forgiveness.
is it?
That's correct.
Right.
How much more is it?
It's relatively inexpensive compared to the policy. There's not a flat charge that I can tell you. I carry it on my own policy because I'd rather pay that small charge than I would.
And it's not likely you're going to have more than one accident within 3 years.
That's correct.
So it's a little less
we're about-
expensive to
Yes.
do that. Right.
Right.
I can
That's
see that.
right.
But you mentioned homes just a minute ago, and I think that's an important direction to also take this, because I know there's discounts for putting home and car under the same coverage or bundled. So how does that work, and what kind of discounts can folks expect with that type of an approach?
So a home auto discount can be significant, and there are some, most, I would say 90% of the insurance companies right now do not allow you to insure just your home. They require that you have your auto, but there are companies that will allow that, to have them separate. But once the incentives of putting those two together outweigh not doing something like that.
Absolutely. And of course, for most of our listeners and viewers, it's important to bundle, because that's what allows you to buy the umbrella coverage as well, which is important for many families.
What about renters?
Tenants.
Do they have access to, because you don't have a homeowner's policy if you rent?
Right. So you have a property policy, though?
Right. And it works the same way
Same
as
way.
far as in terms of the bundling and
And
the
the umbrella.
discounting and everything else.
Right, and then you can put the umbrella on top. So you have to have a home and auto to have the umbrella, and you can have a tenant policy or be a homeowner.
With homeowners, I think it's really important for folks to know when there are issues that they could encounter. One issue that folks have is they might have a loved one die, and so they have a vacant house. You know, they're trying to settle the estate and no one's living in the house. What happens to the homeowner's insurance when you have a vacant property?
Okay, so it's stated in the policy when the ownership of that home changes, that policy has to change. So once a homeowner passes away and there are no other relative, insureds rather, living in the home, that homeowner policy has to change into a different type of policy.
Like a fire insurance policy,
Correct.
isn't it? Right.
Correct.
In other words, the homeowners will expire.
That's correct.
And the agent doesn't have the authority to say, don't worry about it, just keep paying your homeowner's premium.
That's correct. The agent needs to notify the company, and the company can make that decision. A lot of companies will say, okay, we'll continue the policy until the renewal. So it just depends on the company, but the agent needs to notify the company, and the insured needs to notify the agent.
Right.
Okay.
And
Well,
then
we're going to take a break, and we'll be right back, and we'll kind of wrap this up. And we're back. So we were talking about homeowners and some of the different challenges there.
Well, one of the important challenges that have hit many North Carolina homeowners in this past year, we've seen lots of homes underwater. So tell us, how is flood insurance handled? I mean, does that come with our homeowners insurance?
Yeah, absolutely not. It doesn't. It's a separate policy. Flood insurance is always separate. Flood insurance, simply put, is an excessive rain falling and then the water rising or tidal surge. So rising water is what...
So that is not covered?
That is not covered.
Unless we have a separate policy. What about if my hot water heater bursts and I have water everywhere?
And it floods your house.
Right.
Yeah, that's different. That is covered.
So that is covered. That's good to know.
So flood insurance is when it's from nature.
Right.
But here's something that I just recently, unfortunately, learned, is that if there's a flood and it brings mud and rocks and sand and dirt and they cover some part of your property, that's not covered. It's only damage to the structure, right?
Right, it's only structural damage that, right, erosion or...
In other words, if a hurricane blows 50 trees down in your yard, that's not covered, unless the tree hits the house.
Correct. That is correct.
How about wind and hail? You know, I know the folks down at the coast, they have to buy a separate policy for wind and hail damage there, but do I have to have that here in Raleigh?
Nope. Here in Raleigh, wind and hail is included in your policy. So there are coastal lines that are drawn by the state, and that designates which side you're on of those lines, of whether or not your wind and hail is included in your homeowner's insurance.
So if a hailstorm damages my roof in Raleigh, that's covered?
That is covered.
By my homeowners. Now, how about if I drive through a hailstorm in my car and my car has 100 dents in it from the hail? What covers that?
That is covered under your comprehensive coverage on your automobile policy.
Okay, so it's not your liability.
Nope.
It's not your
Collision. Nope.
So it has to be under your comprehensive.
That's correct.
Now, comprehensive is not required, is it?
No.
Welcome back. So Donna, I'd like to try to wrap this up. Just give us a quick summary on what should folks who might come to you ask. I mean, what would they, how do they proceed?
Okay, great. So the most important message I think that I can give here, the money secret, is to make sure that you have an agent who knows you and you trust, that can give you the advice that you need to make sure that your assets are protected and that you don't have any place that you will be surprised one day if something happens and you don't have the insurance that you need. And we would love to help anybody that would like. And our agency can be found at www.careyinsurancegroup.com. And our telephone number is 919-467-1559. Thank you.
Well, I think it's really important too, though, that folks work with an agent who's not only been there for a number of years, but they can know that you'll be there next year and the year after and the year after.
That's important.
How long have y'all been in business, Donna?
Over 30 years in that agency.
Right. So anyway, so Bill, I'm Mike Tove. I own AIN Services. And we are a financial planning firm. We do insurance. We do financial planning. We can be reached at 800-363-2296 or online or on the web at www.ain-services.com.
And I'm Bill Alexander with W.G. Alexander and Associates, attorneys, and we focus on estate planning, elder law, and asset protection. And let me invite you to join me on Saturday mornings at 11 o'clock on WPTF for my radio show, Asset Protection Today.
Thanks for watching.
See you next week.